Thank God it's Friday. Welcome to the Friday edition of Business Incorporated. For this 55 minutes, we're going to tell you very important stories around the world of business. Some of them are Egypt hiking the price of its petroleum products, a promise it made to the International Monetary Fund about a year ago. Also, we're looking at gas flaring in Nigeria. The benefits? Yes, there are some benefits. And of course, the disadvantages and the way forward. Also, we'll head to South Africa, look at the inflation numbers and the drivers. That's what we're going to have for you in the next 55 minutes. I'm Ini John Mekwa. Well, let's start off with what's going on in the global space. As we would normally do, oil prices slipped on Friday on the possibility of nearing Gaza ceasefire that could ease geopolitical concerns in that area. And faltering U.S. gasoline demand also weighed on prices. Brent crude futures fell about 53 cents, that's 0.6%, to $85.25 a barrel. U.S. crude futures also shed 52 cents, that's about 0.6%, to $80.55. Both contracts are set to end the week flat or down slightly after rising more than 3% last week. Oil was trading low on reports of the United Nations draft resolution calling for a ceasefire in Gaza as another round of profit-taking kicked in. U.S. Secretary of State Antony Blinken has said he believes talks in Qatar could reach a Gaza ceasefire agreement between Israel and Hamas. In the United States, which is the world's oil top consumer, gasoline products slipped a proxy for demand. Meanwhile, U.S. dollar, which trades inversely with oil prices, strengthened after the Swiss National Bank's surprise interest rate cut, the first of the Western world to cut rates this year, bolstered by global risk sentiments. In the gold space, prices slipped also on Friday, and that's because of a stronger dollar, although they are set for a fourth weekly gain in 5 as the United States Federal Reserve decision to retain its interest rate cut projections for 2024 bolstered bullion's appeal. Spot gold was down 0.6%, $2,166.79 per ounce. That's the price, and risen up 0.8% so far this week. U.S. gold futures was on the flip side. It fell $2,168.10 per ounce. The dollar advanced to a 3-week high against its rivals and was on track for a second weekly rise, making greenback price gold more expensive for other currency holders. Yesterday, Thursday, gold prices rose to an all-time high after Fed policymakers indicated they're still expected to reduce them by 0.75 percentage point by the end of 2024, despite recent high inflation readings. Fed Chair Jerome Powell has said that recent inflation hike readings has not changed the overall story of slowly easing U.S. price pressures. Gold, which pays no interest, tends to benefit when interest rates fall, as this reduces the opportunity cost of holding bullion. Fed funds futures traders are now pricing in a 74% probability that the Fed will begin cutting rates in June, which has been expectation of analysts. Let's come back home in Nigeria. The Federation Account Allocation Committee has shared a total sum of 1.152 trillion naira for 2024 for the Federation Account revenue to the federal government, the state, and the local government council. The revenue was shared at March 2024 meeting of the Federation Accounts Allocation Committee, chaired by the Minister of Finance and Coordinating Minister for the Economy, Mr. Wale Edun. According to a communique issued by FAC, at 1.152 billion. About that, there was total distributable revenue, comprised distributable statutory revenue of 101.34 billion naira. Value added tax also contributed about 428.8 billion naira. Electronic money transfer levy revenue was about 15.15 billion, and exchange difference revenue of 607.44 billion. Total revenue for the month, 2.326 billion naira, was also available in the February 2024. Total deductions, a cost of collection, was about 66.4 billion naira. Meanwhile, the Nigerian Economic Summit Group is tasking states to reduce their dependence on federal allocation by developing resources inherent in their jurisdiction. The Chief Executive Officer of NESG, Dr. Tayo Aduloju, who was a guest on Sunrise Daily earlier today, believes that there's a need to amend the exclusive list to give states more powers to explore their resources.
So the truth is, we must mandate the states to go further than they have gone so far. But remember that some of our battles are locked in the Constitution, which gives a lot of exclusive powers to the federal government, for which, of course, the states have been asking that in the devolution of power, we see some of these resources domiciled at the state. Another area, for example, is food, right? Agriculture. Agriculture, for example, every state has, based on the Constitution, the capacity to expand agriculture. You have to ask the question, what is each state's agroecological potential? What can it produce to add to the country's overall strategic food output? What is it adding? What is it in every state that they can contribute to agro products for exports? What are they adding? Imagine every state, one of the most expensive crops we can plant in Nigeria is maize. Okay, imagine every state just does 1 million metric tons of maize. We are way above our national demand. National demand for maize is 15 million metric tons. And by the way, we are underproducing to meet our target just for maize. And we have states that are agroecologically enabled to do maize. And if they just did 1 million each, we will not have a gap.
Yeah, so once again, attention, I guess we have to every once in a while remember the states, not just when they get the FAQ, but, also on what they're doing with the resources. Of course, the conversation of giving them more power to explore the resources on their soil, especially the mineral resources and all of that, is an ongoing one where we have constitution amendment or new constitution, not constitution amendment, but having a new constitution. That conversation is going on now. Perhaps it should be one of the items on the list. But now let's talk about another item on the country's list, which is energy transition, energy management, production and distribution in the country. We hear that the federal government loses about 843 or lost 843 billion naira to gas flaring between January 2022 and August 2023. That data was obtained by the National Oil Spill Detection and Response Agency. And there's still a whole lot to be done with this gas. In fact, some people say Nigeria should be known more as a gas country, a gas-rich country, rather than oil, because we have more gas. And we've been talking about banning or ending gas flaring for many years now. It seems we have not gotten that yet in shape. But let's see what Dr. Wisdom Enang has to say about this. He's an oil and gas expert. Dr. Enang, good afternoon.
Good afternoon. Thank you.
Thank you so much for joining us this afternoon.
Thank you very much.
The issue of gas flaring obviously is not new.
Yeah.
We see the government has lost about 843, they say, between January 2022 and 2023. And then on the other side, we also see that there are some benefits to this gas flaring.
Correct.
Yeah. So help us to balance the benefits and the disadvantages and the need to end it, because that's the conversation that's going on.
Yeah, so before we even go towards talking about what the gas flaring means for the economy, I'd like to just take us through a journey. There's been a concerted effort actually to reduce flaring and even to kind of eliminate flaring completely. If we look at the early days of 2018, for example, there was the flare gas regulations, which allowed the government to be able to put out a polluters pay sort of policy against companies that are flaring. Mm-hmm. That was a precursor actually for the Nigerian gas flare commercialization program, because they allowed access to gas flare sites by the federal government without royalties and without payments of any kind, and a bid to monetize it. Now, what we found is that over the years, we've reduced actually our ratio of the overall gas that is flared. It's been reduced. I mean, right in the early days, we had about 20%, but now it's about 10%. But even at that, the 10% is still very significant, and that's why we're having the conversation today. Now, the question in our minds will be, why do we even flare? The two key reasons why we flare. The first will be the fact that we may not have the infrastructure required to utilize on site the gas that we actually produce. And then the second would be for emergency reasons. If there are emergency reasons and there's a process upset, and then of course flaring will be the safe thing to do to not put the assets on the harm's way. The question is, what efforts are we doing as a country to be able to eliminate flare? And in light of the...
So before you go to those efforts, I know that one of the efforts is that penalty. I'm interested in knowing, I think they said the penalty for flaring currently is supposed to be $2 per 1,000. The implementation of that, or is that price not steep enough to discourage?
No, the thing is this. There is what I would call a maximum ceiling to the potential of every measure that you want to put out, right? So if you're looking at something like, say, you're using a regulatory approach, or you're using a kind of penalty approach, right? There's just what you can achieve. You cannot completely eliminate flare that way. So this is why the government had to go through, thought it wise, to go through a sort of an economic-driven approach to be able to eliminate flare. So let's create an economic incentive, which is a win-win for everybody, which is what actually midwifed the Nigerian gas flare commercialization program, to say, okay, how do we put on a market-based approach for us to end flaring, and in a way that actually allows us to consume gas? Because at the moment, right, if you look at some of the value chain of the gas network for Nigeria, you have 40% is export-based. You have another 20% that is based for domestic utilization, but that's mostly power, right? And you know there's a lot of debt in the power sector. And then, of course, you have another 20% of it being utilized on site, right, for the process and everything, you know, gas injection and, of course, gas lift and the rest. Then, of course, you have the 10% remaining, which is the flare, and we're trying to completely eliminate that 10%. So the thing is, you need a number of approaches if you want to succeed. There is no way in the world that penalties alone would cut it, because let me give you some context. If you look at a scenario where there are perhaps a gas flare site, and then you do not have the infrastructure. You've maximized the potential of using at that particular site. And then you don't have the infrastructure to put that flare site. Either one, you don't have the infrastructure to take it to commingle them and then make them commercial quantities that you can then begin to utilize at the domestic level, of course. And then, or you do not have the right constituents that you need to make money. Because when you're looking at the economics, you then look at, what are the constituents of the gas? Are you having dry gas? Are you having wet gas? And then what is your monetization strategy? And that would inform the monetization strategy, and the volume of gas will inform the bankability of the project that you're about to do, and how long it's going to take you to make money, and how long you're going to be making money for. Some of those sites, you find out that, okay, despite everything that you put together, it's not still giving you that commercial incentive to go out and explore it. And that sometimes flaring still has to go on. But what we're saying is that flaring has to go on only if it has to go on. That's, tackling flaring will mean we're bringing it to a point where it's very minimum. It's not something that is everyday thing that's happening. It's only if you must flare and there are bases for it. And of course, then the penalty applies. But you know that your benefits of flaring at that point completely outweighs more than the penalties. Yeah.
So we know that recently Nigeria signed an MOU, a deal with a Chinese firm and they suppose it's a $1 billion agreement to fund and develop gas flaring solutions for Nigeria.
Yeah.
And sometimes we just hear these things. What would be this solution? What would it look like? Would it go to sites? You know, would it be a pipeline? You know, help us who are not in the sector to understand.
Yeah, so I don't have specifics about that particular deal, but what I would like to say is when the Nigerian gas flare commercialization was rolled out at the time where I read about it and sort of appreciated what was going on, the gas flare commercialization program intended to take these flare sites and create projects. So you allow investors to come in and then pitch whatever projects that they felt was going to be best for each site. And then I think as I hear right now, 49 flare sites have been awarded to about 42 companies. And so what the flexibility there allows each company to come in and build a solution. So if you're asking what
are the possible solutions?
Correct.
Exactly.
The solution could be perhaps you could have a petrochemical company. You could have maybe a fertilizer company. You could have a CNG company that building. You could also have power solutions. So those are the number of solutions. You could have an LNG depending on mini LNG depending on how big it is. But for most of the domestic use, the CNG is going to top the chart because that's going to allow you to be able to take gas. Essentially, right? There are zones that are already kind of developed and they're looking for gas to build on further. And a lot of those zones are up north, right? And that's what the AKK is trying to solve. So imagine if one of the solutions were to be someone taking compressed natural gas from the building a mother station down south, taking compressed natural gas down south, and then taking it up north to where you might require for a lot of those industrial processes. So what
doesn't need to be far away. I thought it makes economic sense to be close to your source.
No, it makes economic sense to be close to your source. But what I'm saying is that in addition to opening up industries close to your source, right, there's also a big potential with the technology that we're talking about to be able to expand the utilization across the various, areas of the country, both the ones that are matured, but the ones that are also coming up, and the ones that, of course, are still conceptualized. That's what I'm saying, that the technological approach, right, is going to solve one of two things. It's going to solve the infrastructure problem. It's also going to open up it's going to stimulate the market, essentially. And that's basically, that was the basis of the Nigerian gas flare commercialization. So building on that, I think there are a number of technological options that have been explored. I don't know which one the company is exploring, but I know for definite that the CNG fertilizer plants, those are some of the options that we are going to see over the course of the next few months. Remember, sequel to the award of the the Nigerian gas commercialization flare sites, we're going to see a lot of technological rollout because these companies have come in, the bid, and Nigeria has accepted that, okay, you can go on and deploy. So we're going to see a lot of that. And there's going to be a lot of complementary efforts because you find out that on one end, someone is going to be doing, CNG, for example, and on the other end, someone is going to be setting up maybe a urea plant, and someone is going to be supplying that gas. So I see a lot of synergy happen, and I think the Nigerian Upstream Petroleum Regulatory Commission are going to be looking at harmonizing some of those bidders to make sure that we can leverage on economies of scale and to make sure that we can optimize on our execution. So, we can have a maximized benefit for the Nigerian economy.
The only thing is we don't have timelines to these things. So, Nigerians just wait and hope to see the spillover of these promises and ideas and MOUs and deals. $1 billion for it. This is just one of it.
Well, so we don't have timelines, but I can say we have body language. Yeah, I can say we have body language, and for reasons why. Because I think you've also heard of the new executive orders by the president, right? And essentially,
the oil and gas
reforms, right? Mm-hmm. Essentially putting out a body language, right? Saying we're ready for business, and I think that should resonate across the entire, ministries and agencies of the government to say, look, whatever we want to do, we need to put it out fast. We've spent 6 years already waiting for the award of the Nigerian gas commercialization program license.
We had a year of gas once.
Yeah, we did, but everything is building up, right? We had a year of gas, and then we had COVID. We had a year of gas, and then we have COVID.
Okay, so COVID cut it off, and then we forgot the year of gas.
No, we didn't forget.
Okay.
It metamorphosed into the decade of gas.
Yeah, there was a decade of gas.
And then after that...
But even the decade of gas was supposed to end when?
No, it's not ending.
The decade is 10 years. 10 years. Yes.
Yeah.
So there's an end to it.
No, there is an end, but it hasn't ended yet. but essentially what I'm saying is, better late than never, right? We all know the Nigerian story that our gas value chain was predominantly developed for exports, right? And it is in recent times that we're having the concerted efforts to actually go out there and develop our gas resources and consume it as well as we're developing. One interesting thing is that all of this that we're talking about is still non-associated gas, right? And it's interesting because I think what the presidential initiative is trying to do is to complement that and say, okay, we have already put out programs to allow us make economic recovery from our non-associated gas fields. However, we are at the point where we need to start talking about the associated gas because, we're the non-associated gas, but now we need to start talking about the non-associated gas, which is you going out to develop gas fields, and which is where we're seeing that complementary effort. So I think, although we are coming late to the party, I like to say, compared to other countries, but better late than never. I think we still have a chance to sort of maximize that. But one thing that I like to say that we need to do very quickly is, well, we need to reinforce confidence in the way we execute things. And the second thing is, when the market structure permits, we need to look at our domestic gas pricing. Because the reason I'm saying so is we would need a better domestic gas price to be able to stimulate the investments required for the non-associated gas fields.
I hear you about the domestic gas pricing. Very important for a lot of us. Well, thank you so much, Dr. Wisdom Menan, for your thoughts. Oil and gas experts. Thank you for your time.
Thank you very much.
Let's take a break. When we come back, Business Incorporated continues with the markets. To stay with us. Welcome back. Still watching Business Incorporated right here on Channels Television. We head to the markets now and see what's happening intraday. And Will Ibong has the numbers. Hey, Will.
Hi, Nick. Good afternoon.
Yeah.
The numbers are looking good for the NGX. When you look at the...
Thank God. I mean, for a second day
yes,
this week.
so a second day. At least since the rebound yesterday, we've seen that positive sentiment being sustained at intraday. We just hope that the market closes in the green. Yeah, and there is no flip-flop in the market as we usually see it.
No unexpected move.
No unexpected move. So we kick off, as always, with major stock markets in Africa where sentiments were positive at intraday. We see Nigeria's NGX from the rebound yesterday, sustaining that sentiment at intraday. The NGX was up 0.32% at intraday, still at 104,000, creeping in, moving up to 105. We hope we get there very soon. South Africa's JSE also in positive territory, up jumped 1.2% at intraday. Elsewhere, we see EGX 30, which was closed yesterday, but in green territory. It was up 1.63%, closed Thursday, 29,000 points, very inching closer to 30. And we see Kenya closing yesterday's session as Thursday in the green, up 1.69%. Now let's check out activities at the fixed income markets. A lot has come in, FAC is in. I want to know how liquidity is bubbling in that sector. And we're talking to Chuka Nwachukwu, is the Group Head, Asset and Liability Management with UBA. Good afternoon, Chuka. It's good to have you on the program.
Good afternoon, Will.
So, Chuka, we're just talking about the market liquidity right now, know what system liquidity is. Yesterday, it opened in a positive balance of 47.67 billion naira. However, we've seen that, interbank funding rates, traded, in the levels of 27% and 28%. And this is despite the fact there was no major funding pressure. What are we seeing at this moment today in terms of, liquidity, especially that FAC has come in at over 1.15 trillion naira, yesterday?
Yeah, thank you very much, Will. Like you rightly mentioned, system liquidity has been tight. In fact, all throughout last week, system was in a repo of between 1.5 trillion to 2.5 trillion. However, this week there's been an improvement, duly due to some inflows from coupon and then some maturities. So we've seen that system tightness, move from negative to positive. Like you rightly mentioned yesterday, it was in positive of 47 billion. As of today, is in positive of 52 billion. And so that has greatly improved. On the fact, like you mentioned, about 1.2 trillion has been approved. However, it's not yet in the system. So we expect to see that in the system, sometime next week, maybe early next week, Monday or Tuesday. Like you also mentioned, system liquidity has hovered around between 27 to 28%. That of course is an indication that the liquidity is still slightly tight in the market. And so as long as the fact hasn't come in, some other coupon payment inflows as well coming in next week, we should see system liquidity improve, positively.
I would hope to see that improvement, especially now we're seeing that Naira is also gaining in the market. See the NAFEX with closing at 1,000, like just a little above 1,300 Naira yesterday, and we're hoping that it stays that way or probably keeps coming lower. Yesterday also did see in the secondary market that investors are cherry picking for attractive yields. Yeah, right now everybody's trying to find the good fit for them, particularly the 2027s and 2034 bonds were in the eye of investors. And we also saw the February and March papers for the treasury bills. But what are investors currently trading as we speak?
I think the interest, like you rightly mentioned, is on the shorter end of the curve, 2027 and then 2034 bonds. You will see cherry picking because this level is actually a good level, even though the expectation is that investors are expecting to see more higher yield as well. But I mean, buying a 2-year security bond or a 3-year bond as high as 21%, is a no-brainer. This is bullish levels, and then most investors will want to keep it. I mean, we want the high yield to continue, not only to complement the inflation figures in terms of investment. Of course, that it is not it's not looking good in terms of inflation figure. But however, I mean, any 3-year security at this level, 21 level, is really very good for any investor.
All right, Mr. Nwachukwu, just a minute. Do hold your thoughts. You have Will back in less than a minute. We'd like to inform our viewers that we'll be heading for a live broadcast. It's at the flag off of road infrastructure at Oyo State. And it's Senator Rashidi Adewolu Ladoja Circular Road. We're going to show you that with the governor right there in Oyo State. But that's for our DSTV viewers. On our other platform that's online, if you're watching us online, or you're watching through our DSTV from the UK station or on a domestic platform, we will still continue Business Incorporated. But for DSTV, let's head to Oyo State. Will, it's back to you to continue with Mr. Nwachukwu.
Thank you so much. Thank you so much, Eni. Right now, we are still live, so let's just keep at it. Chika, we're just talking about you mentioned inflation there, and we see that CBN, the Monetary Policy Committee, is set to hold its meeting next Monday and Tuesday. We'll wait for the outcome on Tuesday. But what are your expectations?
The expectation is that, CBN will continue to toe the hawkish line. I believe that CBN will probably hold because if you watch what has happened, especially with the FX in the FX market, between the last CBN MPC meeting and now, you've seen that the FX market has appreciated from around 1,650 levels at the time of last MPC to about 1,350, 400 levels as of yesterday. So I believe that the CBN will want to, hold on and then see how the implementation of this of the last rate hike, goes. However, if they also want to, I believe that they will also want to hike further, it will not be as aggressive as the last time, probably looking at around 100 to 200 basis points. So for me, I think that the MPC will maintain. If at all there's going to be any hike, it will not be as aggressive as the last time.
So you're thinking the MPC, CBN MPC is going to mimic other central banks that have been holding rates? We know that just in Switzerland, they're the only developing country's economy that has cut interest rates since inflation has been skyrocketing. Thank you so much, Chukwuemeka, Group Head, Asset and Liabilities Management at UBA, for sharing your insights on Business Incorporated.
Thank you, Will. Thank you.
Now we head to the Middle East, where most major equities in the Gulf are closed Thursday, except for the UAE, where we see Dubai trading up 0.01% at intraday. It's very marginal, but still a green intraday trade. Dubai is also up 0.18%. Now, news coming in shows that Abu Dhabi Conglomerate International Holding Company, IHC, is looking to list a 100 billion UAE dirham. That's about $27 billion holding firm, which is 2.0. That's the name of the firm, by 2025. Now let's check out the other sides of the region, which is closed. Saudi is closed Thursday, but closed in the green 0.76%, and Qatar is also closed 0.08%. Let's see the US now. Stocks were higher Friday. That's today. Investors are looking to build on, this week's record-setting run. Let's see what the Dow Jones did in early trade. 0.12% up. S&P 500 futures also up at 0.14%, and the Nasdaq futures also up 0.12%. Now, for the second day in a row, all three major indexes closed at record levels on Thursday. Analysts believe that one reason for this market optimism might stem from the Fed's expectation for 3 rate cuts this year, even after a couple of hot inflation reports. Now, let's head to Japan. Let's see how they did. Japan's Nikkei 225 briefly crossed 41,000 points to hit a fresh all-time high on Friday as the country's inflation accelerated in February, while other Asia markets declined. Japan's Nikkei closed up 0.18%. We're seeing the Kospi in South Korea in the red. That's other regions are coming in very hot there, 0.23%. The Hang Seng Index in China, we see it down massively, 2.16%. Let's look at Shanghai and see mainland China, how they performed, 0.95%, down nearly 1%. And S&P ASX 200, that's in Australia, also down 0.15%. So it's just Japan flying the flag, the green flag. And we're seeing that the inflation accelerated, but that didn't stop the index from rallying. But the other indexes in the region are down red at the close today in the red. We'll watch and see how next week will be.
Looks like. But the Nikkei has been really interesting for, I think, about 3 weeks now. They went from hitting, I think, about a 12-year high at 38. Then before we knew, they were 39. And then they did 40 and 41. Perhaps this is the NGX of this season. And
funny enough, just to mention, they started the year on a very rocky start.
Yes,
they had the earthquake, they had all the things, the airlines coming in, and right now they're just bouncing off and shaking it off like nothing happened.
Yeah, well, I guess that's how life is. Well, you have to endure the down to enjoy the rise. Yeah. Thank you so much, Will. All right, now let's move to Europe now, where we look at business activity in that zone. It stabilized in March, and that's because of a modest recovery in the service sector. We have Ekrem now joining us with the details. Hi, Ekrem. Good afternoon.
Thanks for having me, Ini. Hamburg Commercial Bank, or HCOB, released its latest Purchasing Managers' Index survey, or PMI, yesterday. And it reveals that business activity across the Eurozone nearly hit a steady stride in March. This shift comes as a result of what's been described as a modest recovery in the services sector. The PMI, a key gauge of economic health, ticked up to 49.9 in March from 49.2 in February. It's worth noting, though, that any figure below 50 signals contraction. So while we are on the brink, we are not quite in the expansion territory yet. This latest reading, which is the highest in 9 months, suggests that the euro area's business activity is nearly stabilizing, with only a slight dip in the output of goods and services.
What about other sectors? What's happening there?
Well, the services sector has shown more promise, marking its second consecutive month of growth and the most significant rise since June 2023. Manufacturing continues to face challenges, with output dropping for the 12th month in a row, although the pace of decline is easing now. These indicators are crucial as they play into the European Central Bank's considerations on interest rates, especially as we look ahead to potential rate cuts amid receding inflation risks within the EU. The ECB President, Christine Lagarde, has highlighted the danger of delaying rate adjustments, hinting at a possible reduction in June aligned with the bank's upcoming growth and inflation forecasts. And since October, the ECB had paused its rate hikes after an aggressive series of increases aimed at cooling down the previously soaring inflation.
What about the market? What's going on there?
Well, investors in Europe are now betting on what's next after the Swiss National Bank on Thursday became the first major central bank to dial back on its tighter monetary policy with a surprise 25 basis points rate cut. Traders are now ramping up bets on a June rate cut by the European Central Bank and the Bank of England following the Swiss National Bank's move. Yesterday, the euro dipped a bit against the dollar after an initial drop in the dollar's value as the Fed decided to stick with its plan for 3 rate cuts this year, and this is a move that was a bit more cautious than expected. But then some strong US economic reports came in, giving the dollar a boost right back up.
Yeah, everywhere is connected. Ekram, thank you so much for those analysis. All right, so let's head back to Africa, beginning from home, Nigeria. But not very good news now. Recently, CEOs did have a meeting. And one of the things that's top on the mind of chief executive officers is the risks that businesses are facing in not just Nigeria, but Africa. Let's hear some of it. And perhaps that will give us a thought on how to navigate around them.
So risks that should keep someone like me up at night. The first thing I'll think about is the macroeconomic risks. And I think, Boye mentioned FX. We've spoken about that a few times today already. I think that's the first one, and not because it's topical now, and quite frankly, it's been topical for maybe the past 10 years. It's just that we've seen a different dimension to it this past say 2 years or thereabout. In picture of that from point of view of runaway inflation, actually which is actually stagflation now, because you've got prices running away and growth where it is. You've got FX volatility, FX illiquidity and inconvertibility. We've all seen the impact on the numbers this past few months with different companies declaring huge losses from a point of view of FX, and you ask yourself, how could these companies have managed that risk? It was, quite frankly, if you ask me, it was inevitable. Not because we don't have the tools to deal with it, but the Nigerian environment doesn't necessarily we don't have a deep hedging market, for example, to have taken care of some of those risks. So the macro environment is a big risk. Inflation is causing an erosion or decimation in effective demand. Demand is decimated, and that also leads to very high commercial risk as well, right? The next one I think about is perhaps talent and resourcing, and this is one that, again, we've all seen the impact of the great Japa over the past, maybe, 5 years or so now. And it continues, and it's a wave that we're dealing with. And the implication of that is that it's hard to get hold of talent and keep hold of talent. And that also impacts strategy setting and execution and being able to deliver on the corporate objectives. The third one I would say is cybersecurity. We all go through thousands of attacks every day, whether you know that or not. Every single one of us right here, we're constantly being hacked as we speak right now.
Talking about those macroeconomic headwinds in South Africa, it's inflation, well, just like Nigeria. So for the second time in a row, we saw inflation in South Africa rise from 5.3% in January to 5.6%. Of course, what this means is doing business becomes more expensive, purchasing power is eroded, and some other implications. But let's have our correspondent, Innocent Semosa, join us to tell us some of those factors that have contributed to this and how they, living in South Africa, are feeling the pinch. Hi, Innocent. Good afternoon.
Good afternoon, colleague, and our viewers around the world. It's always good to be in your company.
Yeah, great. So back here in Nigeria, food is the major driver of inflation. What is driving inflation mostly in South Africa?
So are you telling me that there's less jollof?
There's more, it just costs you more.
All right, Eddie. I guess from what we got from Stats SA, higher commodity prices such as oil and food have really, driven up production and transport costs, ultimately leading to higher consumer prices. But yesterday, when we initially had a chat about it, I went to speak to different economists, really wanting to find out what is it that is not there in the report by the Stats SA that really we could, read and really find some of the things that are missing there. One economist suggests that exchange rate fluctuation, currency volatility, particularly the depreciation of South Africa's rand against major currencies could have really pushed up prices, and imported goods also, could have, played a part in that regard. He also went on to say increased, consumer demand, could have possibly fueled economic recovery efforts, and stimulus measures, might have also, played a part in terms of, the pressures that the economy is facing. But I saw online someone saying that government policies also played a part, and I really beg to differ with that, because if you look at the previous budget speech by Finance Minister Enoch Godongwana, he in fact did not even touch taxes, because if you speak about government policies such as taxes adjustment and regulatory changes, that could actually influence prices across value sectors of the economy. But it does seem as though that is out of the picture because it didn't touch taxes. Some political commentators say because it's election year, the ANC is trending carefully so that they don't, upset the voters, because you'd know that increasing taxes is really, unpopular with voters. But utility prices increase. That's the major challenge here in South Africa. You have challenges of food, we have challenges of electricity and water. Water tariffs. Some residents here in Johannesburg, they are going to their fourth week without water. The utilities struggling to get back their pumps, and the tariffs, water is quite expensive. So that I think that could have an influence on the price across the value sectors in South Africa, when you're looking at utility. Yeah, but it does seem as though it came as a surprise, because when you speak to different economists, they really did not expect this, but it would seem like it came as a surprise in it.
Yeah, so Innocent, seems like Nigeria has a lot to offer South Africa, at least its people, because we do have the jollof to give you. We are generous enough to do that. And when you talk about utilities, I tell you, in Nigeria, Nigerians have learned not to depend on public utilities. That is why. You talk of water, you talk of power. You guys don't know how to use generator, we can teach you. So that's why you see that the Nigerian economy, the private sector provides these utilities for itself. And so, it's something like security driving our food inflation. But is it obvious that the South African Reserve Bank is going to hike rates in the next meeting, seeing that inflation has gone up 2 times in a row now?
I can't believe you just bragged there, but anyway, I concede. I concede, and I like the economy of Nigeria because it's resilient. It has proven that it can actually operate without government's assistance, which is something that we still yet to discover in South Africa. But I guess we learn it from Nigeria, and we get in there. Now, going back to your question, Governor Lesetja Kganyago has repeatedly said that until inflation retreats to about 4.5% in a sustainable manner and settle there, the central bank will be unwilling to basically adjust its policy stance. So I think this is the target range for the Reserve Bank. The uptick, we do know that this means that the rates have moved further away from about 4.5% midpoint of the South African Reserve Bank target range. It's also important to remind our viewers that Lesetja Kganyago has been re-elected as the governor of South Africa. Is going to continue. He got an endorsement from President Cyril Ramaphosa, so he'll continue to be the governor of the Reserve Bank. But we also know that it also comes as a day after data has shown average inflation expectation for this year. And next year, it remains above the midpoint for now, although they declined slightly from the previous report, But I guess it's really difficult to tell now, but it does seem as though they'll the rates will be unchanged for the next coming 3 months or so, if I can predict that,
All right, in the center. Well, we have an MPC next week, Monday and Tuesday, and where we know we might be going for another hike because our level of inflation is really high. But thank you so much, Innocent, for painting the picture right there for us from South Africa. And just call me afterwards. I'll give you those tips for the public utility and all of that.
Thank you so much, colleague. I'll do that.
All right, now let's head to Egypt and see that that country, they have a committee that raised prices on a wide range of fuel products, and it starts today, Friday, pressing ahead with a promise it made to the International Monetary Fund more than a year ago as part of the $3 billion financial support agreement. In a letter of intent signed in November 2022, Egypt has said that it would allow most fuel product prices to rise to bring domestic prices more in line with those in international energy markets. It also promised to make up for a slowdown in such increases over the previous year, but it subsequently hiked prices only once in March 2023. The IMF this month expanded the financial support agreement to $8 billion to help Egypt overcome shocks to its economy caused by war in Gaza, and after the government renewed its commitment to the reform measures, including a sharp devaluation of the currency. Well, from Egypt, we move to Kenya, where Kenya and Uganda have launched a project to reaffirm border markers vandalized for extraction of byproducts believed to be valuable for resale. The markers, some of which had never been repaired since independence, were destroyed as bandits targeted them over unverified claims that the material used erect them was made from valuable materials. Officials from Kenya International Boundaries Office and Uganda's Ministry of Lands, Housing and Urban Development announced this, that they'll be conducting a 15-day boundary reaffirmation exercise in those areas. Now let's move to the crypto market and see what's happening this afternoon, happening especially to Bitcoin as Bitcoin leads other markets. Looking at the index right there, it's greedy, but not very greedy, even though it's above 50. And well, I guess that more of the details of the prices will help us determine which way that investors should go. Let's look at the prices for this afternoon. This was taken at about 12 noon before this program started, and we saw Bitcoin has dropped to about 64,772.89 after losing 3.28. Ethereum 3,437. I wonder if the surge is over. Then BNB 570 gains 0.42%. Cardano lost almost 2% right there. XRP has been surging for some days now. Some things are moving this market. But let's have Olumide Adesina now joining us to give us more details to the numbers that we see. Hi, Olumide, good afternoon.
Yeah, good afternoon. Thanks for having me.
Thank you. So what's driving the market this afternoon?
I think there's moderation of risk, and that's why we're seeing crypto assets and stock also having their price stabilize at their weekly lows. And that's preempting to the fact that the US dollar is at its 1 month high. You could recall that despite the outlook of the US Fed talking about interest rate cuts, it seems that the hot economic data from the United States might change that narrative. So right now, I think there's more interest in the even currency, and that's why you see the dollar rallying high, and you see Bitcoin dropping from the 67 at some point to around $64,000. And that has also dragged altcoins and the Bitcoin dominance increasing by over 50%.
So would you say this pullback, they say just before halving, there's normally a pullback and all of that. Is this in preparation for the halving?
Well, there are a lot of things the market is looking at, and halving definitely will take the center stage because we are a few weeks away. But also, you need to also look at the fact that Ethereum ETF is also in play. But these things have been priced. You look at the price at which Bitcoin is trading this year alone, and also the fact that we've seen outflows the past week and this week. So preemptively, it seems that the bullish run has softened. So despite the fact that halving is also in play, the strong dollar, the macros, geopolitical uncertainty, it's very difficult to really put on the direction. But it's fair to say that at some point, Bitcoin prices will be supported at key levels, particularly the 50,000, 58,000 mark. But how long it will take, it's $1 million question.
How do we know when halving is upon us?
I think, so the timing, according to experts in the Bitcoin space, it's should between the second and fourth week, and definitely it makes Bitcoin mining more difficult, to reward more difficult, and definitely scarcity will definitely elevate prices, and that's the economics. But also you need to also look at the fact that safe haven attention, which Bitcoin naturally attracts as store value, is also a predominant factor. And in fact, that's what really rallied Bitcoin to 70% year-to-date gain. So I think it's much more dynamic. The market is much more dynamic. Standard Chartered gave its outlook that Bitcoin might hit 250,000 this year. Well, I don't know why they made that forecast, but the reality is just that with gold hitting its record high, the fact that we're seeing more geopolitical uncertainty elevating is pretty much very difficult to really give a direct view of Bitcoin's price direction right now.
All right, Olumide Adesina, thank you so much for giving us those details.
Yeah, thank you for having me.
Have a great weekend.
Yeah.
All right, so that's it too. I think it's time to say have a great weekend to you too, our viewers. Thank you so much for going through this journey with us from Monday till Friday. And we'll start again on Monday. But before then, tomorrow at 7 p.m., Ladi Williams will be here with Capital Market to give you a summary of the market. Remember, you can always watch Business Morning, Business Incorporated, anytime you want on YouTube. Our YouTube is www.youtube.com/channelsweb.com. So I'll see you when you get online and physically or online. I'll see you next week. I'm John Mekwa. Have a restful weekend.